I'm going to address the financing side and what is out there, because I think actually there's not always a lot of awareness as to what financing solutions are available, particularly in terms of discounts for retrofitted and greener homes. Very quickly, for anybody who doesn't know, the Green Finance Institute is a non-profit organisation. We were founded in 2019 as part of the government's Green Finance Task Force. And our role is to work closely with the market to blueprint, test, implement and scale financial solutions to the climate crisis. And we're really trying to target real economy outcomes, so actually helping people to decarbonise their homes and not just improving the green credentials of the finance itself. And what I wanted to start with, because the questions will get into more deeper implications for the buy-to-let market, I wanted to just start with an overview of the green mortgage landscape. So as mentioned, I'm the Green Mortgage Campaign Lead, and I work within a team whose mission is to ensure that every household has access to a financing solution to help them make the transition and make their home more resilient and future-proof. So without further ado, I'll get into what does the green mortgage market look like? What is the lay of the land? Oh, and there is a bit of a hygiene note at the beginning. So actually, there isn't currently a formal regulatory definition of a green mortgage, which does make it difficult for us to quantify the amount of green mortgage kind of capital that's being mobilised currently, because we just don't have the data. But we have got some broad definitions that most products do actually fall into. And again, usual thing of any specific product that I mention is not an endorsement or recommendation to invest, etc., etc. So this is an overview of what the market looks like. And as you can see, green mortgages fall broadly into two buckets. So we have sustainable finance, or finance for existing greener homes. So you already meet A, B, and in the buy-to-let sector, actually a C is common to see as well. You meet that EPC standard and you can get a discount on the headline rate of your mortgage, or other things like cashback, rewards, and in the mainstream residential market, enhanced borrowing. So actually additional borrowing capacity to be able to purchase that more sustainable property. So the security property is green at origination, and these products are really designed to influence purchasing decisions and reward people who at refinancing stage have made some significant improvements to the property. I think the real implication for this, because the vast majority of green mortgages on the market today are underpinned by energy performance certificates and benchmarked to them, if you have improved your property, it really pays to get that post EPC in place. You will have to do it anyway for your MEES compliance, but many people miss that step and then they miss out on the access to these wider financing opportunities. So as I said, the main one that most people think of is probably the rate discount. For example, the NatWest Green Mortgage, where you get a reduction in the headline rate. In the mainstream residential market, you have enhanced borrowing, where basically it is assumed that if you have a new build or a highly efficient property, your energy bills are going to be lower. So when the lender's doing those affordability calculations to determine how much you have left over at the end of the month to service the mortgage, they can factor in those bill savings and lever that up into a higher borrowing amount. So helping to boost sort of the green premium in the market, because if you're putting more money in people's pockets to bid for greener homes, you're going to eventually have an impact on valuations. And also just generally helping to reflect in lenders' kind of risk and credit risk models, the actual underlying value of the asset and how kind of secure and well that loan is likely to perform. There is a correlation between greener homes as well and loan performance, so it's in lenders' interests to start factoring this stuff in. The reason we don't see it so much in the buy-to-let sector is just because of the rules around interest coverage ratios make it a little bit more difficult to play with the affordability calculations, but there may be space here for further lender innovation. And then lastly, there's cashback solutions. So as I said, this may be a return of fees or a chunk of money that recognises that you've got a more sustainable property. Now, the second bucket transition finance, I think, is really interesting and more relevant probably for the challenge that faces many landlords today, because this is directly providing additional borrowing or cashback or discounts to that reflect retrofitting, so that rewards you for having carried out a certain set of works, or that actually make carrying out those works possible. So again, in the mainstream resi side, we've got the Virgin Money Retrofit Boost mortgage. It's probably the most kind of generous offer on the market, where with up to £10,000 available in cashback in order to complete retrofitting works. And this is really, yes, you'll have to fix for a longer period and accept a higher rate, but it's something that can be appealing to those who don't want an impact on their housing equity and to take on additional borrowing. Again, I'm calling on lenders to kind of do more of this stuff, because there's less innovation around this in the buy-to-let market, but certainly there are a lot of additional borrowing solutions as well. So alongside cashback, additional borrowing is where you can take out a further advance during the term of your mortgage or at the point of refinancing. And there are many offers now from building societies directly targeted at landlords for those green home improvements. So before you take out a costly loan with a high interest rate, it's really worth being aware of what's out there on the market. And of course, rate discounts. What these look like on the transition side is where you complete the works and then the rate drops once you confirm that they've been carried out. Again, less relevant for buy-to-let, but something that's worth bearing in mind in the wider green finance landscape. And so I think overall there are 93 green mortgage products propositions out there, and about a third of those are targeted specifically at buy-to-let. The GFI on this early December is due to launch its new and improved Green Mortgages Hub, which will detail all of these products propositions. So if you want to check that out, that's 2nd of December 2025. That should be going live then, but maybe watch this space. So I think one last thing I do want to mention is that there are also, to go alongside the process, it's not just about the financing, it's about the journey as well, and pairing that with a suitable retrofit solution. There are ancillary products and services and information hubs directly available via lenders now. So there are 51 different solutions on the market today that we've managed to identify. Again, these are going to go live in our new and improved hubs, but broadly these fall into the categories of discounts on partnership products. So there might be a solar panels discount or a heat pump discount, whole home energy surveys, information and guidance hubs. And when you start to compare these services with things like lender cashback and even government grants as well, because there are, I think the boiler upgrade scheme and also GBIS are open to the private rented sector, and that's £7,500 for the boiler upgrade scheme to switch away from gas heating to a low carbon solution like air source heat pump. When you kind of combine all of these different offers that are out there, you can start to get a better overall amount that you're paying. So it's not just about finding that one solution, that one green mortgage that's going to cover everything, but there may be a bit of a mix and match going on here. Bearing in mind as well, there are many unsecured offerings on the market as well, point of sale finance. So it's just really, really important, I think, to be aware of what's out there and really consult a broker, because brokers are the ones who are in that more whole of the market position and able to give you and signpost you in the right direction. So that's a whistle-stop tour of the green mortgage market. I can talk more in depth about buy-to-let in the Q&A. I fear I may have gone over a little bit. Luke's going to cut me off now, but that's broadly the lay of the land in the market. And yeah, happy to take questions and hand back over to Luke.